If you're a part of any lending transaction, one of the biggest thing going on through your mind is the rate, the interest rate, and at what point should you be locking and securing that rate so the market doesn't shoot up and your payment goes through the sky. My name is Zevi and I'm the owner of a company called Brook Inc. in Woodland Hills, California. I'll be happy to give you that information. And more than that, if you like this video, please make sure to give it a thumbs up and don't be shy to subscribe to my channel. So with that, let's get started. All right, rates and locking them in. I don't really want to get too much into the interest rate piece, but I do want to discuss at what point in the transaction you should be locking your interest rate. Now, I want to give you some fun facts that you probably didn't know because I doubt anyone has ever brought them to your attention. Number one, did you know that when you lock an interest rate, there's a significant difference between locking a rate for 15, 30, 45 days or 60 days. Yep, there is a cost difference. So you would actually get a better interest rate locked for 15 days than you would for 60 days. Did you know that? And the reason I bring that up is because you see so many opportunities out there with people telling you we offer lock and shop for 60 or 90 days. Sure, you could do that. Why would you? Unless it's a very volatile market. My point is, the only time a lender would let you lock a loan on the wholesale site for 15 days is if you've gone through the whole transaction and cleared out all of your conditions. Otherwise, a typical lock period is approximately 30 days. Now, some people might argue that, but that's a pretty standard lock period. And the reason being is there are things you should know on both sides of the coin, and let's discuss them. Number one, as you can see, the time that you lock an interest rate for affects the actual interest rate and the cost. And why is that? Because you're protected for X number of days against a rate hike. So you might be wondering, okay, so what happens if the rate goes down? Well, you're protected against the rate going up, but if it goes down, then you would have to break that lock to be able to get a lower rate, and typically that would not happen. All right, so you do make a decision to lock a rate. However, you have to keep in mind that it's done to protect you in the transaction. Now, you might ask, okay, so when in the transaction is a good time to do that? Well, it depends on you. You see, if you dive right into the transaction saying, I think the world's going to turn sideways tomorrow, rates are going to go through the roofs, elections are coming, whatever it may be, you just have to know that you have to get to the closing table before that rate lock expires. Let me explain that to you. Because there are rate lock extension fees associated with rate locks. So you can't just lock a loan and say, okay, we're good to go. No, you got to perform and make sure that you close by the time that rate lock expires. Now, some lenders, depending on who you use, will actually let you sign docs, and then no matter what happens after that point, you're protected. Other lenders, you not only have to sign docs, but you have to fund your loan. And you might wonder, okay, well, why is that a big deal? Isn't that the same thing? Well, not really, because when you own the property as an owner occupied and you sign your loan docs, you have a 3-day grace, which means that you're not funding the loan for another 3 days to follow. Okay? So if you're signing your loan docs and your rate lock expires and the loan doesn't fund for another 3 days, you're paying for a rate lock extension fee. So it's very important to understand that, yeah, you do want the best rate, and you're like, okay, great, so let's just lock this up for the shortest period possible. When you do that, you also compromise you having to pay rate lock extension fee if you don't close on time. So how do you protect yourself? Well, a good way to do it is depending on what kind of a market you're in. You could be in a volatile market, and if you are, then yeah, I would recommend locking the rate. I wouldn't lock it for 15 days. I'd probably lock it for 30 or 45 days just to give you enough time to make sure you're able to do what you do. Now, mind you, if you're in a purchase transaction, there's two sides to the coin. So hopefully you can move as quickly as possible. It doesn't mean the other side will. So you got to give yourself a little bit more time. If it's a straight up refinance, you have all your ducks in a row, then yeah, you could probably close it in 2 weeks if you're moving super quickly. All right. So it really depends on the position that you are in, the type of transaction that you're in, what kind of transaction you're in. There's different kind of lending transactions. So my advice would be to rate lock after your loan is conditionally approved, because at least you know what kind of conditions you're up against and approximately how much time you need to satisfy the rate lock. But you should know that rate locks, if they do expire, they will cost you money to extend. An extension could be for 5 days, for 15 days, and you might think, okay, how much is something like this? Or it could be an eighth of a cost of an eighth, which is 0.125, or a quarter, 0.25, and just average for extension up to an extra 15 days. And depending on the loan amount, that could get pretty expensive. All right. So if you have questions about any of that, you could drop them in the comments below, or you could just reach out to me directly at 818-697-8220, and I'll be happy to walk you through it. If you need to get pre-approved, whatever the case may be, happy to help. All right. If you enjoy the video, again, don't forget, give it a like so other people like yourself can find this type of information on the web because it's relevant. And if you like these videos, then please support the channel. Feel free to subscribe. I would appreciate it. All right. Thank you for watching this, and I'll catch you again on the next video. Take care.